What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button and subscribe and notification buttons as well if you haven't already. Really helps the channel grow, so we appreciate those who continue to tune in. Make sure you have the notification button hit as well, because we do release bonus content from time to time, so you want to make sure you're alerted when we release those. But the nightly and weekend videos, like tonight's video, mostly focus on identifying triggers and targets for trades ranging from intraday scalps, all the way up to swings and leaps. So if you want a deeper dive into how exactly we set up our charts, broadening formations, levels of support and resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you are not familiar with the STRAT, make sure you check out the link in the description of this video for the free PDF quick reference guide that'll help you really understand the basics of the STRAT. It's really simple to pick up. So if you're not familiar with that, I suggest you go check that out. But I do encourage you to watch the full video. We do go through triggers and targets, on short-term time frames, but we actually, look at the price action on all time frames, all the way up to the 1 year chart. So, stay tuned, and I'm sure you'll appreciate it. With that, let's go ahead and look at the agenda for today. It is going to be a bit quicker of a video today. I do have an obligation to get to here in a few, so I'm going to kind of run through things a little bit quicker than I normally do, but hopefully the information will still be as impactful, and if it's too fast, hit that rewind. Anyways, today we'll just recap the price action from today, Tuesday, February 10th. Then we'll zoom out like we always do, look at the week, month, quarter, and year before we zoom back in to set the 4-hour markers and the triggers and targets for Wednesday, February 11th. We'll also do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right. So let's go ahead and get into the charts. Starting with the 5-minute chart, like we always do. This is how we can capitalize on our proven and repeatable strategy to get into, early morning scalps, early in the session, right after it opens, essentially, or to get early entries into longer day trades, right? The strategy that we use is we look for higher lows at or above opening print. We look to get into calls targeting previous high day and overnight high. If we get lower highs at or below opening print, then we look to get into puts targeting overnight low and previous low a day. Now, the past few days, you probably heard me mention, when we get into this part of the video that, if you were on the 1 minute, you probably saw a higher low here or a lower high here. And we kind of listened to ourselves with that, right? The past few days, there's been a quick move, very early on in the price action that is normally triggered on the 1 minute. So we are starting out here on the 5-minute, but let's go ahead and switch to the 1 minute, because today we took a little bit more of granular approach than we normally do, and went to the 1 minute at open. Oops, where are we at? There we go. All right. So at open, we can see we had a pretty big, come on, make this bigger. Pretty big lower high right here, right? So price opened up here at 64.67, which did make a higher high. However, we went down and made a lower low, right? So initially we made a broadening formation. Let's get out the right tools here and we can visualize it, right? So initially we had, the broadening formation there. You could even say it was from there to there and from there to there, right? So we had this broadening formation that we were working with, at least early on. And then we pushed up, but ended up making that lower high, right? And that's where we entered. Well, not up here, but once we triggered the lower high. So once this candle went 2 down, going below the low of this candle, we went ahead and entered right there. We pushed down, got to that overnight low. We didn't let go of any of our position there because there just wasn't a lot of magnitude there. We were at the money, so it was starting to, make some profit. But because it was the 1 minute, not something that we normally do, we weren't quite as heavy. We didn't have as many contracts as we normally would, entering off of maybe the 5 or 15 minute. So held on to those. Luckily got the lower high there and continued to push down to this broadening formation. Monthly broadening formation is the green line. We have the 150 fib extension of the November 2025 range, and then which was basically the range that we were in for 2 months. And then we have the 100 fib retracement of the last little pop that we had out of the previous range, right? So a lot of levels here that did find support. Also, found this 5-minute broadening formation here, or 1-minute broadening formation, and bounced, wrote it down a little bit. But once it intersected with these horizontal levels, we did see that bounce. We went ahead and exited our position once we made this higher high as opposed to this soft lower high here. Again, we're on the 1 minute, so we didn't want to play around too much. There can be a lot of noise on the 1 minute, and so we didn't want to deal with a whole bunch of up and down, trying to wonder when we're going to get out. Just went ahead and took profit there. So nice little move to the downside. And then we did get I think it was a higher low on the 15 around 845. So we didn't buy calls here initially at the bottom, right? That would give you some good risk to reward though, if you did enter down there. But if we go to the 15-minute, let's get just today on the chart here, and it was 945. We got the higher low on the 15-minute, and so once it took a little while, but once we went two up, above the high of this 2 down candle, locking this in as a higher low, we went ahead and entered calls, rode those up to previous high day, took profit on a majority of our position there, but then did end up giving back a little bit of profit on the rest of the position that we did hold, because we waited to get confirmation of a lower high on the 15 before we got out. The 1 hour wasn't giving much as far as a trend either, right? If we look here, there was a broadening formation essentially created on the 1 hour with this first 1 hour candle of the day. This big 3 is the first 1 hour candle of the day. So we went from actually this was a slight downtrend if you really want to look at it, right? Because we had the high and then a low, then a lower high, which shot down to a lower low, and then back up to a higher high. So you can see how we had the broadening formation on the 1 hour here as well, right? So not much as far as trend is concerned, and if just looking at it visually, right, it's just going sideways within this $65 to $62 level, right? So wasn't much else to go off of there. So we did take a little bit of a loss on the on our runners that we did leave, but we had already made profit from the ones that we took profit on earlier, plus the profit we had to the downside. So a good two-sided trade day. Not the most profit in the world, right? We didn't have a big movement like we did on Monday or last Friday or last Thursday or anything like that, but still made profit on both sides of the equation. Just in that 1 hour, again, we're not really in a trend. 4 hour, we keep getting these soft higher lows and higher highs, but it is starting to flatten out a little bit. You can see this 4 hour broadening formation was, had a good steep angle to it, and this newest 4 hour broadening formation that was created is flattening out a bit. We're still playing with this daily downtrend line, this monthly broadening formation here. This green line is the monthly broadening formation. The orange dash line is the daily downtrend line. So we haven't totally defeated it yet. We still got to watch out to make sure we don't get pulled back in, and we've got some pretty heavy economic data coming in tomorrow morning, which could do that to us. So looking at the day chart, what's going on? Looking at the day chart, right? We just went 2 up again. Let's get a little clearer chart. Here we go. 2 up again, but barely. And we did close below where we opened, so it was a red 2 up. Could that be the lower high? Possibly. We'll have to wait and see what tomorrow brings. But if we do continue to the upside, we've still got this 3 2 down combo 2 up, looking for the high of the 3 there, right? So that would at least give us an equal high on this soft lower high here, which would give me a lot more confidence that if we got to this level and then pulled back a little bit, it would give me more confidence that we're just probably going to set a higher low here. But if we don't make it up to the high of this 3 here, if we don't make it up to this 67, 62 level, I'm looking at that as a lower high on the 4 hour and the 1 day chart, and looking to see, we might be getting a lower low here, dipping back into the previous range, possibly going to close some of these gaps, right? So if we tighten this up a little bit, right, here's this range that I was talking about we were in from, really before November, and then we popped out of that range, right? We came back down, we tested it. So far we've tested it as support, or we've made it support, and we're just trying to continue to push back up, right? So that's what we've got from the day chart. Let's zoom out a little bit more. Let's look at the week. Still an inside week. There we go. So there's a week chart. Still an inside week and still in that upper half of the previous week's range, really up in that upper third now with the close here today. So I want to continue to see that push up. Hopefully that economic data gives us that little boost that we need, because if we go 2 up on the week, that locks in last week as a higher low, and we're just continuing this trend sequence to the upside. All right. On the month, we've talked about this previously, still inside on the month, and we're just defending against going 2 down on the month. As long as we don't go 2 down on the month and trigger this 1, 2 up, 2 down, which would take us back down, the magnitude would bring us back down to $28. As long as we don't break down and go 2 down on the month, we should be all right. Right? Even sideways action is fine. Look at it as bullish consolidation. All right. On the quarter, let's clean this chart up one more time. There we go. Get those weekly broadening formations off of there. And then on the quarter, right, we've already run this 1 combo 2 down, combo 2 up strat, right? 70.08 was the magnitude of that move. So, right, there's the completion. We're getting a little bit of pullback. That's fine. Nothing really to worry about here on the quarter. Same with the year, right? We triggered that. Let's see. Ooh, that's a little too big. Triggered the 2 down, 2 up this year, early in January. I think the first day of January we triggered it. Excuse me, and it ran up to 70.08, which was the magnitude, and we're seeing that little bit of pullback. So nothing to worry about there either. And that, going 2 up this year did lock in 2025 as technically a higher low in that trend sequence, even with that big drop back in April, right? So that's what we've got from a zoomed out view. Let's go ahead and zoom back in real quick and look at tomorrow, or how we will attack tomorrow morning. There we go. Oops. Yeah, get the right chart up here. So we can see right now, first of all, we've got the 4-hour markers on the board. Whoa. There we go. There's the previous low day. We've got our 4-hour markers on the board. So up at the top, we've got previous high day, overnight high, overnight low, and then previous low a day. Now, these are overnight high and overnight low currently. So let's just say overnight high pushes up a little bit more, maybe overnight low pushes down a little bit more, and with everybody, let's say economic data is good and we open up. Let's move the overnight high up here, right? Say we open up here. Oops, let's get the right candle out. All right, there we go. So say overnight high is up here, right with previous high day, maybe even a gap up, but either way, and then we get a little bit of pullback right before the market opens, and let's say we open here at 64.71, right? Well, it's the simple proven strategy, right? Higher lows at or above this level look to get calls. Obviously, there's not as much magnitude here. Previous high day and overnight high are just right there, but those would be the targets for that move, right? So higher lows at or above opening print, look to get the calls. Lower highs at or below opening print, say we open, push down, maybe push back up a little bit, but end up getting that lower high at or below the opening print level before when we start going back down. That's when you want to get puts targeting overnight low and previous low a day. Right now, if we reach either of those magnitudes with some type of momentum, or we get another trigger that triggers at that level, then obviously we look to our 4-hour and our 1-day notes for the triggers and targets there, and you can continue letting runners run. But the ultimate targets for the proven and repeatable strategy for early day entries is overnight high, previous high day, or overnight low, previous low day. All right. So now let's go back to the 4-hour chart. Look at things from more of a full day trade, maybe overnight swing trade perspective. We were hit once again with another 3-1 today. Now yesterday was a green 3 or a green bullish engulfing candle. Today we did get the bearish engulfing candle because it did finish red. Now it was a hammer, so we can't look at it too bearishly, right? And then the one that followed it still closed within, looks about the top half of that candle. So it can't be too bearish, right? But it's definitely not the most bullish thing in the world, right? So it does give the opportunity for a 3-1, 2 down entry at the low of the 1, exit at the low of the 3 to the downside, or a 3-1, 2 up entry at the high of the 1, exit at the high of the 3, right? That's how we would attack the 4-hour chart from a strat perspective. Again, remember, we're not really in a trend from the 1 or the 4 or the 1 day, 1 hour, 4 hour, or 1 day perspective. So just stay on your toes and be ready to play either way, or just wait until we get to, the edges of the range, right? Either we get down here to this $58 level, or we get up here to this $67 level, maybe even $70 level. If you want to wait till we get to those edges to make your move, that's probably the smarter thing, right? In here, inside, in the middle, you've got to be ready to go both ways, go either way, calls or puts, and sell possibly at the drop of the hat too, because we've not chosen the direction yet, right? So just stay on your toes if you're making moves on the inside, right? On the 1 day chart, let's look at that real quick, because that's still important here for a couple of reasons, right? If we go 2 down tomorrow, that locks Tuesday in as a lower high, and we're continuing this downtrend on the day. But if we do get the 2 up, that can continue this 3 combo 2 down, combo 2 up, again looking for this 67.62 level. And once we get there, looking to, when we get there, I'm guessing that we would probably have some type of corrective activity, sideways action, but we would be looking for that higher low at that level to push us up, to market makers expected move higher for the week or further, right? So just keep that in mind. From the day perspective, we have a good chance of setting a lower high. But even if we don't set the lower high, there's not exactly a whole lot of magnitude left in this particular strat reversal, and there's a couple of levels of resistance that we will be running into that will need to be dealt with. So don't get too far over your skis there, all right? Let's go to the notes here. We've looked at the charts quite a bit, and it's like I said, I've got to kind of get a move on things. These are the notes for Wednesday, February 11th, 2026. There will be 224 trading days left in 2026 on Wednesday. And the close price on Tuesday, February 10th was 63.34. We know the week, month, quarter, and year are all green, and it would take going below these levels to flip those particular time frames red. We know that market makers' expected move for the week was plus or minus $8.47 from the close price on Friday. Again, if you're not familiar with that level, check out our weekend videos where we dive deeper into the expected market makers' expected move. And then we know that there are no gaps above, but we've got plenty of gaps to the downside that could be acting as magnets. Right, we talked about on the scalping perspective or an early entry into a day trade perspective. You want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. All right, we looked at on the chart the 4-hour time frame. If we go to the downside, that gives us a 3-1-2 down reversal, triggering at 62.62. Magnitude of that move 61.42. If we reach that 61.42 with some momentum, look for possibly going to 59.29. If we go to the upside, that gives us a 3-1-2 up, triggering at 64.47 and giving us a magnitude of 65.21. Not a whole lot of magnitude there, a little bit less than $1. So we did put some extended targets out there in case we reach magnitude with a little bit of momentum. All right. Now on the day chart, if we go to the downside, that gives us a 2 up, 2 down reversal, triggering at 61.42. Magnitude of that move being 59.29. And again, if we reach that level with some type of magnitude, we've got the extended target of 57.98 out there with magnitude, with momentum. I apologize. If we reach this 59.29 with momentum, then we've got the extended target of 57.98. And again, to the upside, if we do trigger that upside, it continues this 3-2 down combo 2 up. That trigger is 65.21. Magnitude for that move is 66.78. But again, reach that with momentum. If we've got good economic numbers in the morning, we may open at 66.78. So we've got these extended targets listed out here for you as well. If the day really starts to ripping, then we're going to be going 2 up on the week, and then that's when you can roll over to these weekly triggers and targets, right? But from the day and lower, those are your triggers and targets. Now on the week, like we just talked about, we are inside. So if we go to the downside, that would trigger this combo 2 up, combo 2 down at 49.93 with a magnitude of 48.13. And if we reach 48.13, that then triggers a 3 combo 2 up, combo 2 down. That would take us all the way down to 46.79. And then we've got our extended targets out here as well. If we go to the upside, it gives us a 2 down, 2 up, again, locking last week in as a higher low. That triggers at 67.62, and the magnitude of that move is 71.98. If we do reach magnitude with momentum, we've got the extended targets listed out here for you as well. All right. Then we talked about the month. We're still inside, deciding whether we're going to go 1 2 up 2 down reversal or a 2 up 2 up continuation. Got a little ways to go down to trigger the downside. Obviously less to go to the upside, trigger the upside. So looking for that upside to trigger, but we're still inside on the month. So and we've got 2.5, 3 weeks left of trading. So either one can happen. We've got to be ready for both sides, right? And then we talked about the quarter. We already triggered the STRAT and ran it. So we're just looking for, further continuation to the upside. We've got 74.21, the all-time high. And then we've got some extended targets out here in blue sky territory for you. And then on the year, we did trigger the 2 up, 2 down. 50.76 is going to be was the trigger, and 70.08 was the magnitude. We already reached that, like we said. So again, all-time high in blue sky territories would be out there. And actually, I need to switch this up to a red 3. If we were to go 3 or a bullish, bearish engulfing candle on the year, we'd have to go all the way down to 723. So don't know that would happen, but again, the market can do whatever it wants. So we just got to be ready for both sides of the equation. And that's what we've done here with our triggers and targets for everything from, scalping perspective all the way up to the 1-day chart, right? So again, it was a little bit quicker video than normal, so I hope everybody was able to get some good information from it. Apologies if I've left anything out, but I think I touched on most of the topics that we touch on in our nightly videos. So again, I hope everybody got some good use out of this video. Try to stuff in as much information without taking up too much of your time. So if you can hit that thumbs up, it'd be really appreciated. And then if you know somebody that this may help, give it a share. This method doesn't work just for SOXL. It works for any publicly traded company in the U.S. stock market. So, like I said, give it a share. Our goal is to just make trading a little bit easier for folks, right? You don't need to fully adapt our style. If you do see something in there that you like, or you see that works when you back test it or try and put it into play yourself, go ahead and add it to your particular style. I'm not saying you have to totally take our style, but this is a pretty effective method. So anyways, I've rambled enough and I've got to go. So we'll end the video at this point like we always do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Wednesday morning or Wednesday during the day, we hope you got some good rest last night, woke up refreshed, and we look forward to getting out there and trading with you.